Welcome to Bitcoin Escape Plan. We have a lot to talk about today, and I'm not going to waste any time. As always, we're going to start off with the 4-hour chart. A lot has been happening today, so we're going to cover all of that. I did take a perpetual trade in this range. I will go over that at the end of the video. At the start of the video, we're just going to focus on analysis. First on the 4-hour, and then we will go to the weekly and monthly time frame for the recent closes that we just had, which are telling us a lot about the momentum of Bitcoin right now. If you are new here, you can go over to bitcoinescapeplan.com. Shortly after this video is released, I will release this week's newsletter. You can get that every Monday. Goes over the key levels that are important if you don't want to wait for every video. Going back to the 4-hour chart. So this is the major momentum that we had coming into today. This is the 4 o'clock in the morning candle here in Los Angeles time. And I ended up taking a short up here, which again, I'll go over that later, but that was, hit my indicator and I did take that trade. I'll go over that later. Not important right now. So at the moment, we are seeing some strength at that 68.9K pivot, and it is slightly rising above it. However, we did see weakness at 70.1K, and if we can remember, anyone who's been on the channel for a while, 70.2K is a really important higher time frame pivot that we want to keep an eye on. It has changed quite a bit across the other time frames, but I still like to remember that one. I do still think it's important because the price still seems to be reacting to that, although technically this is a higher high than here, but only by like $100, $80, so not very much. This did come out of nowhere, so very similar to how these guys kind of came out of nowhere. That momentum jumped very quickly. When looking for entries, I think trading off of the SMA as opposed to the Bollinger Bands has a much lower probability of an easy trade. Like you might look at this and think, oh my God, I could have bought here and it went up, but there was very little to indicate to you on the chart that that was going to occur other than obviously this volume here. But I think in general, you would be better off not trying to chase those candles. Be positioned for them when you can. This would have been the appropriate place to position for those over on Saturday and Sunday. But yeah, in general, I do think you need to be patient when the chart looks like this. So the short-term levels for the 4-hour, we have had another reaction down here. This is over on Sunday to the 4-hour anchored VWAP middle band. So again, for anyone who's not familiar with those, the upper band is way, way higher. I believe it's at like 90K, 89.9K or something like that at the moment. Let's check real quick. Nope, still higher. There we go. It is 95.4K, so considerably higher than where price is at the moment. And in general, when we go from the top band down to the lower band, that typically ends in us breaking the middle band and heading towards the lower band, which is sitting all the way down here at 29K, 36K rather, sorry. 29K is the higher time frame. So we expect the closer that it gets to this middle band, the longer it spends time there and continues to have to break down lower, it's going to continue to pull the price down towards 36K, which will not happen immediately. So let's take a look at these trend lines to see if we have any hope of getting above that 70.2K pivot, or if it is likely that we're going to continue to fail lower. Now, these trend lines actually need to be updated quite a bit. Technically, these are invalidated. This one as well should be much, much steeper now. I think I'm going to wait a little bit longer before I redraw them. But essentially, you know, our base support isn't in here anymore. It's actually down here, which means it's probably like over here that we really start to see a major breakdown of the level, which is essentially where we are now, just longer into the month of March, which at the moment it currently is like it's in favor. We can go to the monthly time frame. I'm already all over the place on this video. It's in favor at the moment of a bullish close for March, just because we have 1, 2, 3, 4, 5 red candles in a row. Now, for anyone who tells you that it's not possible for us to have 6 in a row, they're incorrect. In 2018, we had 6 in a row, so it's not impossible. Though 5 is uncommon, certainly. That's probably one of two times that has happened on the chart. Maybe the earliest candles, but for the most part, that is a rare occurrence. And it would not be that hard. All we have to do is close the month of March above 66.9K, and it's bullish. So not really that crazy. We are currently above that now. So even if we see a fairly flat month, that would still be regarded as quote unquote bullish in terms of the actual candle close. And then I would still expect us to continue to fail after that point. And this trend, I believe, has not been broken. This is the overwhelming downtrend, which at the moment we would have significant pressure at 80.4K. And I have talked about that several times now, where I think this downward pressure, which is a little bit easier to see on the weekly time frame, snap to that real quick, you can see that we're continuing to break down below these pivot points with the weekly SMA. It is starting to curve a little bit, but still dropping. You know, when we originally were talking about this trend, we were hoping for another retest of 96K, but it's looking like that SMA, which is currently at 86.8K, is going to continue to get pulled down to 84, to 80. And by the time we actually interact with it, I think it's probably going to form as, even if we have a reaction to the SMA, 80K is probably going to form as resistance there rather than support. Again, because we just don't have any precedent really for the price to randomly start jumping to the upside now. Anytime where we are below the monthly SMA, it is typically a long period of time that we are below it. Even here, that's still 1, 2, 3, 4, 5, 6, 7, 8, 9 months that we are below it. We are currently only on month number 4 that we are below it. So a reasonable assertion is that we're going to continue to chop sideways and that we do still have more downside pressure. This is the bottom of the Bollinger Band on the monthly right now. It's about 55.7K. That's going to be very important if we do lose 59.9. Any reaction to the bottom band initially will be met with relief, but does still break down ultimately lower than that band touch, which would fall in terms of what we believe on this channel, where if we were to hit 55 and consolidate there and continue to go out, then that would give us a push lower to potentially 45 or lower. I still think 34 to 39 is the lowest that I can believe based on the support around here in 2022. But we won't really know, and it depends on how violent things get for the stock market and everywhere else. At the moment, gold still looks very good, so that means uncertainty for the rest of the markets, which is not a good thing for Bitcoin. So at the moment, if we snap back to the 4-hour, we really want to see strength above. It's currently 68.9K. Let's call it 69K. 69K being the 2021 all-time high. So very important psychological level that the price is currently needing to close above. And then this 70.7K pivot, slightly above that other one that we mentioned, the 70.2K, which I do believe has moved. Yeah, it's referenced as an older pivot now, but as you can see, we just failed it again. And in general, if we're looking at the daily trend there, that does not look bullish. like that looks decidedly consolidation-y. And again, if we start to see weakness at 70.2K, that is going to push the price down lower. Now, there's always a possibility that this rounds and starts to come back to the upside. You know, there are plenty of instances where that occurred, even though that is short term before a drop. Short term before a drop. You know, like we're not in this same regime over here in Q3, Q4 of 2025. We have every reason to believe that the price is going to continue to break down, and it's just a matter of how quickly. Now, we did just have almost a touch of the upper Bollinger Band on the daily, which if we do have a break of that, that will typically indicate downside pressure. It's closer to this guy, I guess. So initially, that would not have read as a proper short. You know, you would have been in negative profit for a little bit before your short was actually correct. I'm learning a lot about perpetuals and futures contracts for that. Obviously, you can just hold spot. You can't really short spot the same way. You would just have to sell it and then rebuy back at a later time, which is a pain in the ass unless you have millions of dollars. For the rest of us, we got to use leverage products. So in the short term, that's what we want to pay attention to is 70.2K as well as this 68.7. But again, let's just call it 69K. I think that is the more important psychological level that the price needs to remain above. But 70.2K is going to put some pressure. And we've got to remember 73.8K, this is reading as 73.6, but 73.8K was the peak in March of 2024, which is also, I would say, a very important area of support or resistance. And it's looking at the moment like it's probably going to be resistance. We broke right through that. There was really very little time at all spent deliberating about that price level. We pretty much broke right through closer to 71. So I would assume that is going to actually form as resistance, not support. Now, again, there's a strong possibility that overall the general trend that we see, if we can get strength above the 76.2K pivot, which is a huge if, by the way, it's a very large if. We're still, I would say, below the midpoint here. Let me see what the exact measurement is. Oh my God, I'm so good at using the measurement tool, guys. Now it's going to give me the hotkeys. Jesus, let me just measure it, please. Dear God. So good at this. So it's probably like a 16% candle. It's not letting me get an accurate read on that for some reason. Yes, thank you, hotkeys, for showing up again. So it's about a 15%, 16% candle total. And we are slightly up from the bottom. No, I guess it's closer to a 19%. So we're like right at the midpoint, pretty much. So we would not only need to close this week either right at the midpoint or slightly above the midpoint, but then we would need several weeks where, again, we remain above the midpoint and head back towards this 76.2K and then start to close above it. And again, if that takes us 3 or 4 weeks, this SMA, in a best case scenario, is going to round out. I don't think that it's going to curve up at this point in the cycle. There's very little evidence for it to do that. That's a pretty clear downtrend. That's a pretty clear downtrend. So that's what we have to assume is going to be the case, is we're going to continue this downtrend, and it's just a matter of when we can actually interact with it. And here we had our initial interaction and failure was in December. Then we had that Fibonacci pivot that would be the equivalent of the 96K failure. And then we chopped around for February, making a couple attempts towards it, but failing, ultimately breaking above it in March before again failing. And I think it's a little bit different in 2018. We gave it up in March. So we actually held on to the weekly SMA a little bit longer. Although this is very similar. Drop in January into February, a rise into February into the end. That did not happen for us. We had a sustained drop into February. And then here, a retest of the weekly SMA and an ultimate failure in April. So that is still what we are anticipating, is some form of relief rally and ultimate failure of the weekly SMA in this Q1, early Q2 part of the year. Basically by the middle to the end of April, I would assume that this progression is found out, which again, at the moment, is looking not like it's going to be at 96K that we see that event happen, but closer to this 80K pivot, I think, is where the SMA will actually be at by the time the price has an interaction with it, which is then going to form, I would imagine, pretty similar to this guy, where it may be a case of we are above the weekly SMA, but not able to get above the Fibonacci pivot point. And for us, again, that has been pulled lower. It's not even reading 80K as the important one, which means we will probably have an interaction with the 76.2K pivot, which will form as support before interacting with the weekly SMA, with so much room to run. between there and the 96K pivot. And again, if we're not even regarding the 80K pivot as important, though I would assume we will personally. This right here, 78.4K to about 80.7K, super important for the midpoint there in April of 2025 when we dropped. Or not the midpoint, sorry, but just like that major break of structure in 2025, I think is going to be an important psychological retest now, because either we show strength there and then we can continue back towards 96K, which is not going to happen in my opinion, or again, we form some type of strength initially off the weekly SMA and then a failure as it drops lower. So it's kind of tough to say, because if we do show strength around 76.2K, then the SMA itself may form as resistance. Like here, it didn't really act as resistance there. We rose right to that Fibonacci pivot, but we were far from this lower one where we were closing. Whereas here, it's a very different shape of the chart. Like we have continued to just break and break and break. And even here, like that's 4 weeks consecutively where we are closer to the bottom of that than the top. So that's why I'm saying now, over the course of March, we really want to pay attention to, is price retaining the midpoint of that range, or are we starting to dip back below the midpoint again, which is essentially right where we are. Like again, let's just call it 70.2K. Well, actually, where's the bottom of this guy? Yeah, the close is literally 70.3K. So 70.2, 70.3. As long as the price is below that, it's going to put pressure towards the 64K pivot. The 64K pivot being very, very close to 63.1K, which is the 50% retracement mark from the 126 all-time highs. Super important. General trend, just to remember, probably bearish. It is what it is. All right, that's enough for analysis. I'm going to go over the trade that I had today. I did get stopped out. I do think I lost like 88 cents, which is bullshit. But the actual strategy was correct. There were multiple times where I could have closed in profit. And I'm still just kind of learning. I've literally put like $100 on my Coinbase. Like I do not have very much money on there. And I'm pretty much just learning what the difference is. I thought that you could not trade perpetual contracts in the US. That is incorrect. I did trade a perpetual short today, not a futures contract. So that is something I'm going to be paying closer attention to moving forward. I did get stopped out because the margin requirements go up overnight, and I just didn't have enough money in the account. I think the margin required would have been like $230, and I literally, like I said, I put $100 in the account, so I got liquidated on that. Not because the price was wrong, although that actually benefited me now because I would be in loss at the moment. I think I believe I entered at 69.150, and I think it closed me like right below that, yet somehow still I lost money. This confused me, but regardless, what I've been looking for and what I will continue to look for is anytime we have a break of the Bollinger Band to the upside, that is going to indicate a short at some time in the near future. And same thing for if we have a break of the Bollinger Band on the bottom side, that is going to indicate up momentum at some point in the near future. Even if, again, sometimes you have to get it quick, otherwise you're going to have sustained periods of loss. You know, like here you would be down by 3%, which is not a big deal in like intraday trading, but you will probably get liquidated, I think, if you leave the position without a tremendous amount of margin overnight. So there's definitely a benefit to being able to use these contracts simply because you can long or short the price. I mean, let's take a step back and assume that you are not using any leverage at all. Like in a best case scenario, if you're just going to trade spot, then you would be using it essentially the same way, where you would want to buy here and do nothing until it has a reaction to the SMA again, which in this particular case, you'd barely be in profit there. You know, you really would have wanted to continue to average in over the course of that. But anytime it's touching the bottom, that indicates it's going to go in the opposite direction. And anytime it touches the top, that indicates it's going to go in the opposite direction. So I would expect something here where it might be a couple candles, you know, same as here. This is multiple candles that you would have had to, on some of these, you would have been wrong. if you said that the price was going to go, I mean, this is not as good of one. Like to separate it by like, the preference is candles that close outside. This is a wick that would be a slightly less favorable, and then this guy is totally inside it, so you would not have taken an entry there. You would have taken an entry on either of those and hopefully closed by somewhere in here. Otherwise you had to watch it go in the opposite direction. But for these, you could have taken along there, you would have been correct, and you would have had until right around there, about 8 hours later, to sell it before then being incorrect. But again, only a day or two later would have been correct. So it depends on your time frame. It depends on whether or not you have exposure to leverage. And then if you are just trading spot, you just have to be realistic about, like, these are small moves. Like it's 10% over the course of whatever that is, 2 days essentially. Which, if you're going to move any significant amount of money, then like you would need to have more than $1,000 in the trade essentially to even make $100 off of that, if my math is correct. Which it should be 10% on a grand should be $100. But that's the point, is like you would need to have $1,000 worth of capital in Bitcoin, sell it at that time, and then do nothing. In the spot case, you can't do anything else other than you could increase exposure to. I think I'm done with IBIT, to be honest with you. I was trying to trade the IBIT option contracts for a while, but I don't think so. I think I'm going to stick with these perpetuals and futures contracts because it allows me to focus just on the Bitcoin chart and nothing else. So what I would anticipate is, I mean, we're outside of the 4-hour Bollinger Band right now. So technically, same thing. This would still indicate a short. And based on everything else that I just laid out in the analysis, any reaction to 70.2K negatively on, I believe that is a higher time frame pivot. Maybe not. Maybe it was a daily. It was a daily. So we would want to be looking at that in the next, whatever that is, 2 hours. What the hell time is it? 2 hours. 2 hours and 15 minutes. If we close below that 70.2K pivot, it's probably going to, I mean, we're really tight to this 68.7K pivot. So I would expect more consolidation than an actual like significant failure there, especially after like a decent amount of volume to the upside here. But if we're looking for other entries, then that's what we need to pay attention to, is these. I'm probably gonna have to wait until tomorrow or just add more cash, quite frankly. I may just have to add more cash so that I can actually sit in a position overnight, because I do still think that this short trade is correct. It's just gonna be a matter of how close does it get to 70.2K. Right now it's struggling. It did get, like I said, to 70.1K earlier, but this current 4-hour candle has not been higher than 69.5 yet. So that's really pretty much all I would be concerned about in the short term. I'll keep you guys updated on other perpetuals and futures trades that I'm taking. Again, it would work for spot as well. You would just need to use a significantly larger amount of money, whereas that contract cost me $70, So, and there were multiple times where I could have closed it in $5 of profit. I've been trying to base the strategy primarily off of looking for 1% swings. That's the main reason why I want to use it. I didn't quite hit that 1% swing. I did buy, I think I waited until this candle closed. So I was somewhere in here, like I said, 69.15. So there was very little room for me to actually catch the downside. I would have had to catch it closer to when it was at 70.1. And it really is not a guaranteed entry. I think just because we interact with the Bollinger Bands less often than we interact with the SMA, or just being in the middle of the bands, for example, anywhere in the middle of the bands is not a good entry. It tells you nothing, and even off of the SMA, it tells you nothing. How the hell would I know that it was not going to go back here instead of there? Other than, again, you can use the Fibonacci pivots. That's why I kind of like combining both. Fibonacci pivots kind of allows me some other information of like, all right, we just lost another key level, so it's now less likely that we're going to retest the SMA as well. So I like using a combination of the Fibonacci pivots which tells me at the moment that we actually are invalidating this short because we are raising higher. So again, not that big a deal that I lost 88 cents and got liquidated, because I would be in more loss now. I would be, I mean, whatever, it would be like $1.50 worth of loss or whatever. So it's not like breaking the bank, but you got to be able to extrapolate that to larger positions. And again, if you were in a spot position, you would not have been liquidated, you know? So it really just depends on your level of risk tolerance. I know I have people who follow me from all over the world. So there are some people who do not have access to leverage products and they only have access to spot BTC. But again, a 10% move over the course of 2 days, if you can spot it, you know, I think it's a little bit harder to understand that that's going to happen from that, you know, because to the same degree, like we had some major drops there where if you were buying that with the anticipation of it going up, you would still be waiting, and you may be waiting for a very long time. So it's not to say that universally it works, you know. That's why I like waiting for breaks of the 4 hour. But for all of these instances here, you know, you could have taken a 1 or a 2% trade. You could not have taken much higher than that. And that's really what you need to be looking for with these trades, is thinking about them specifically as scalps. You know, if I think about it separate from like my general like DCA or spot accumulation strategy, I focus overwhelmingly towards trying to time the bottom, because it, like, you're never going to be exactly correct. But like, just for example, if you had bought, instead of buying at 15.4 or whatever at the bottom, you would not have been upset if your cost basis for Bitcoin is fucking 19 grand. Like, you would not be upset, you know. And it's going to be the same thing this time around, where if the price actually does get down towards this 44K pivot, you're not going to be upset if your cost basis is 49,000 instead of 36,000 or 40,000. Like, it doesn't fucking matter when the price is back at 150, 200K. You're not going to care. You know, maybe you will if you're an absolute lunatic, but for the most part, it doesn't matter. You just want to focus on having as much cash as possible once we get down to those major breakdown levels. And we're pretty close. Like, again, this is May, so that's after. So already in January, February, we're at the 50% retracement, and then it starts to give up closer to May, April. So we still have a decent amount of time where the price is going to chop around and make up its mind whether or not it's going to drop lower, which means your heavy DCAing is not optimal at the moment. Certainly a time to lightly DCA. Anytime we are below the weekly or the monthly, it is a good time to DCA, period. That's just how the chart works. But again, if you had done so over here, you would have had to wait about a year before you're in profit. So obviously really bad for leverage, versus, you know, we don't know how long we're going to have to wait over here, but we can assume, you know, if we wait till closer to, for us, this would be the 44K pivot. This is the 22K pivot. Oh, gee, that's interesting, Jacob. That's almost like it's 50% of the 44K pivot. Bitcoin is math. Like, I don't understand why people want to make it fucking complicated. It's really not. Just pay attention to the chart. It's not that complicated. The closer we are to that level is where I would say you can go aggressive DCA, or where you should actually lump sum. I think, and this is not investing advice, but that's just based on the chart. That's how the chart behaves. Anytime before that, you are being needlessly aggressive, and you're going to have to wait a longer period of time to be in profit. Whereas any of these, you would have had to wait no more than 6 months, and then you're in profit for life. So that's kind of the point, is like, once we get closer to like July, August, September, October, when you buy at those levels, it's very likely that you're not going to be in loss for longer than, say, 3 to 6 months forever. You know, I've seen some crazy claims of people talking about how Bitcoin is going to break below 20K this time, but I just, like, it just goes in one ear and out the other for me. Like, I think a lot of people are completely delusional, and I'm just going to listen to the chart, and the chart does not tell me that. The chart tells me we're probably going to find support somewhere in here at between, you know, whatever, 29K and 32 to 35K. I would imagine we're going to stay above that. The same way that here, when we went to 15.4K, we stayed above the 19.7K high, the wick. We broke below that rather, and stayed above the actual monthly closing candles, which were closer to, 13.8, 13.9. We did not touch 13.9. So I don't think that'll work the same way here, because that would indicate, and actually I saw somebody argued with me on Threads the other day about this, and that's actually, I realize what they're talking about now. If we were to assume the same strength as that indicator from there, then that would mean that we would not drop below 58.8K, or this guy here, which is 61.3. So technically that's already been invalidated because we did wick below to 59.9. So this first one has already been invalidated for that. And then it would just be a matter of whether or not we see an invalidation as well for, what is that, 58.7. Which I got to be honest with you folks, I see no reason why we won't break through that like tissue paper. Like, this one was predicated on, it took several months to get there. Yeah, I don't see it personally that we're going to stop magically at 59K. I guess it's possible. As far as I'm aware, with the Clarity Act and the Genius Act, they don't really go into full effect until next year. So all the liquidity from the stable coins will not enter the markets until next year, which means we'll continue to get uncertainty and the banks fighting with the crypto companies over who can have yield and whatnot. So I don't see how that's bullish for Bitcoin, combined with the fact that gold is still in a massive uptrend. SPY is showing some weakness, which is very rarely good for Bitcoin. It still tends to follow it to some degree, although heavily decoupled at the moment, since SPY is still up here essentially in its own chart, whereas Bitcoin obviously has been breaking down for a significant amount of time. So what am I looking for other trades? I would still be paying attention at the moment. Again, these are what I'm going to cover in my membership, is specifically 4-hour breaks of the Bollinger Band, either to the bottom or the upside. Like when I go live, that's what I'm going to go live about. I'm going to specifically be talking about those breaks because those are your best entries, period. Now, your exits, I think there's a little bit more room for interpretation on where you can set those, how aggressive you want to be. Again, in this particular instance, I got liquidated at a good time because I actually lost less money. I lost like 88 cents instead of, I would have lost more if we continue this uptrend towards that 70.7K pivot, which is very possible. You know, there's nothing really preventing us from attempting higher. You know, we did get higher over here in the middle of February. But currently we just have wicks to those levels. This is a higher wick. It is a higher candle close, but still, I think too early to call that bullish momentum. So on the 4-hour, I would say probably still short. Do not take that as trading advice. I'm just showing you what the chart is showing me. And I will give an update on Wednesday if I have entered another position or not. Like I said, I'm starting very slowly with the leverage side of my portfolio. I'm mostly focused on the spot Bitcoin accumulation. Like that's all that I'm really concerned about is, like I said, once we break 44K, it is time to heavily spot accumulate. You can do whatever you want with that information. Go check out the newsletter. It'll be up right after I've finished uploading this video. Thanks for watching. I'll talk to you on Wednesday.